All right. So let's get started with capital markets discussion. How many of you know what the capital markets are or have heard the term? Okay, so they're actually a lot more simple than they may sound. And so when you look at all the different financial markets out there, there's two that we pay a close attention to within the investment world. And those are the money markets, and the capital markets. And so we're going to address the capital markets, but I'll talk about what those are real quick. It's basically a market where buyers and sellers can get together to trade assets like stocks, bonds, currency, derivatives, so like options and futures, things like that, as well as currencies and other debt instruments. And so when we look at the financial markets, again, there's two that are very important: money markets, capital markets. So money markets are used for much shorter term purposes. And so oftentimes they're used by commercial banks, retail banks, and other financial institutions to create an acceptable level of liquidity to meet their working capital needs. And then investors may use the money markets. You probably have heard of a money market fund. Have you guys heard of a money market fund? So it's taking a lot of these really short-term investments and putting them into a mutual fund portfolio. And investors, individuals, may use those for really the same purpose. So they might have short-term liquidity needs. Maybe they're putting money aside for a home purchase, or maybe to purchase a car, something that they're going to need to access within a year or less. And so they're looking for something that has liquidity, a short time horizon, and also has a lot less risk. And so those are the money markets. Now the capital markets are where the stocks and bonds sit. And so when you hear capital markets, they're talking about the stock market, the bond market, and really the equity and fixed income markets that we see globally as well as here in the US. And so companies will use the capital markets to create and generate income that they might need to expand. Maybe they're looking to get some financing to get into another business line. Maybe they are looking to expand their research and design facilities. So they'll use it to raise capital, and they'll do it in the form of either equity, which is a stock, or in the form of debt, which is a bond. And we'll talk about some of the other types of debt instruments and stocks in a moment here. But the most common or the most popular stock that's issued is the common stock. And so when a company is looking to raise capital and they want to use the stock market, they'll do that through the primary exchange, or the primary market, and then the secondary market are two components of the capital markets. So the primary market is where the companies will go to issue stock. You guys are probably familiar with the term IPOs, right? Initial public offering. So when a company starts out, it's usually a private company. And as they grow and have need for additional capital to continue their growth, and again, to do those different things, maybe it's a merger, maybe it's an acquisition of a company, they're going to go out there and go public. And they do this by issuing stock to the public, and they do it through an initial public offer. And that's how that stock gets created and is then traded on the exchanges. They do the same thing with debt. And so through the primary markets, they'll issue debt out there for the first time perhaps, or maybe they're issuing debt for a second or third time, and it's just a different series of debt. And that's really to help to continue to grow that business. Now that's the primary market. In the secondary market, again, capital markets has two markets, primary and secondary. The secondary market is where all the trading goes on. So that's really like the stock market, what we refer today as the stock market. So that's where the New York Stock Exchange and the NASDAQ exchange interact. And so this is where really individual investors are trading stock back and forth with each other, or fixed income bonds. And so if I'm an owner of, we'll use Facebook in this example. So if I own Facebook, and let's say I have 100 shares of Facebook, and I want to sell my 100 shares of Facebook, I'm going to do that in the secondary market. And so I'm going to put it out there, utilizing a brokerage firm. I'm going to put it out there to see if anyone wants to buy it from me at the given price that that company is going for at that moment. And then that purchaser may come to the market and say, okay, I'm willing to pay that price to buy Facebook. And so I'll sell my Facebook to that person. Now, I'll never see that person. And usually it's done through a brokerage firm, through an exchange. But that's how the secondary market interacts. That's how it operates. Okay? And so those are the two markets within the capital markets. So capital markets, two markets, primary and secondary, pretty simple. When we talk about the stock market, it's the secondary market that we're referring to. And within that, the two major exchanges that we operate with are the New York Stock Exchange and the NASDAQ Exchange. And so Mark's going to get into more detail about the different instruments that we use within the capital market space, and then also talk about the exchanges as well.